Hi traders, thanks for joining us here at Framework FX, and today we're going to be looking at moving averages, how they are, what they are, and also a highly profitable strategy that I can personally vouch for because it was my first consistently profitable strategy when trading, okay? Now, moving averages are used from everyone from beginners to experienced traders. They're incredibly useful, but they do have pros and cons, so we'll have a quick look at that before we move straight on to the strategy. But if you're new here and you like what you see, you could do us a massive favour by hitting the like button and subscribing and ringing that notification bell. It really does help. And we have plenty of great stuff coming up. Okay, so let's start off by taking a look at just what moving averages are. Okay, moving averages are a technical analysis tool used to calculate trend direction, support and resistance, and they are a lagging indicator. Okay, and that's really important. The fact that they're a lagging indicator is important because it means that we're using historical price to calculate where we think price is going. Okay, so if you're using TradingView, first of all, you want to come up here, type in moving average, and pop it on your charts up here, and then we'll change that. Let me just make that a little bit more clear for you. There we go. Okay, and we're using a 9-period moving average. Okay, so that means, just bring that to the front. That means that we are using the previous 9 candles to base our moving average off of. Okay. So a 9-period moving average is pretty fast. You would often see people using maybe a 200 moving average, and we'll come on to that in a little bit. But as you can see, the moving average is mainly to show us where trends are and when price is sort of slowing down, stopping to trend and then looking to reverse. Okay, and we can use that to base where we think the market's going, just to add a bit of confluence normally to a trade. Okay, so first we need to know how to properly calculate a moving average. So you can use either the open, high, low or close. Ignore these at the bottom. Most people though choose the close price, and that's what we're going to use just here. So that means that the moving average is based off the close price from the previous 9 candles, and like I said, you can change that to whatever number you would like, but what we do here, so we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 candles. Okay, so if we take them close prices of them candles here, so then what we do is we add them all together, divide them by the period, so that's 9, and that gives us where we would expect the moving average to move next. So we pop that on the chart there, and then if we just move down here a little bit and we skip on one, and there we go, it's moved on there. So then we'll take out the top one and it just keeps rolling on. Okay, we readjust 139091, and then we move price on again, and the moving average moves with it, and it's really that simple. There's nothing too much to talk about. That's why it's a very useful indicator to get to know when you're a beginner trader. It's also important to mention that there are a couple of other types of moving averages. This is a simple moving average, but there's also an exponential and weighted moving average, and simply all they do is add more weight onto more recent price action, but we'll see that more in a minute. Let's go take a look at the strategy. Just before we get on to the strategy, we have a web page, frameworkfx.com. We post information, we have blog posts on there, and we also run a copy trading service. It might be of interest to you, it might not, but please feel free to jump across there and check that out for us. That would be great. Okay, so here we are, guys. Let's talk about the strategy. It's a very simple strategy, really useful for any level of traders, but it can be so profitable, especially when backtested. So there are really only 3 things that you need to make this strategy great. Okay, the first thing, you need an exponential moving average, as we briefly mentioned in the past part, a 200 period exponential moving average, you need the 15-minute time frame. I'm here on the pound dollar. You can use it on other time frames. I just find the 15-minute gives you the right amount of entries on this. And then lastly, it's simply price action, okay? We'll discuss that more in a minute, but as you back test this strategy, as you look through it, you start to understand more and more, and you almost get to a point where you feel like you can really read the market a lot better. Okay, so, sorry, didn't mean to do that, bring that back up. There we go. Okay. So as mentioned before, the 200 period exponential moving average is integral here. It means that we're taking into account the previous 200 candles, meaning it's quite a smooth line, but it's also very well respected as a lot of traders are constantly watching it. Alright, so that means this is the strategy here. You're going to have to excuse my drawing, bear with me. We're looking for a push up or down in that case. We're looking for price to pull back here, touch the moving average, and then immediately reject. What we're looking for is a really nice strong wick and push back up. Okay, we get that, then we're thinking it's time to enter the trade. Okay, so we enter on the close of that strong rejection, we place the stop at the bottom, and then you take profit. Again, you will learn better as you backtest where to put it. You can either use a set amount, or I like to use highs and lows, but we can look at that in more detail in a second. Let me just get rid of them. Okay, right, so let's take a look at this now. I've picked this out. I don't know whether we're going to get any great entries here, but as you can see, price is quite clearly, it's pushed up, and now it's quite clearly respecting that 200 period exponential moving average. Now normally maybe you've already entered, maybe you've got clipped out, or maybe you're lucky you've stuck in it already, but let's just have a run through here and see if we can see any more of them sort of rejection type things. Okay, right, perfect. So straight away we've seen it. We pushed through the exponential moving average, and a lot of people must have been watching it, and they've pushed it straight back up. We've got a lovely wick there, rejection, and I would be more than happy to get involved in that. So we would open the trade here at the close of that candle, stop goes just below, give it a couple of pips, give it a little bit of breathing room, so it has to break that, and then take profit. You know, you could go here at 2 to 1, that might be nice, but I like to go for a recent high or a recent low if we're selling, and that looks good. 3 to 1, and there we go, we've shot straight through. Wow, we've really shot straight through that one. So as you can see, when you get those, you're in early, and the rejections can be absolutely massive as people jump on board with you. So there you go, that's a good example. Let's carry on running through. Let's see if we can find something else. Price is still pushing up. We're still looking for buys here as it comes back down. Right, okay, so this is a good example of why this strategy can be so good. As you can see, we've watched this, we've seen it touch. If you'd have just bought on a touch of the moving average, you would have been cleaned straight out of this. So that's why the price action becomes important. And now we're looking for this to push down, come back, and have a rejection to the downside. So as we move up here, right, okay, so this is an interesting one. So we've touched it, we've rejected the moving average, it's come back and closed below. That may not be quite a big enough wick for me to enter on that. So then you can say, and you'll learn this more in backtesting, maybe we have a look at what the next candle's doing. We've got a bit of an indecisive candle. See if we can get a bearish candle here. Yeah, okay, so that's a really strong bearish candle. Now I'm looking to get involved because that's a strong rejection. So as you can see, it doesn't always have to be dead on it. I would put the stop back up here, still above that initial rejection of the line, and then I would aim for maybe down here. I wouldn't take anything less than 1.5 normally. Let's go for this low here and see what we get. Okay, brilliant. So again, we've ran straight through that. You could have maybe even dropped it a bit further if you're using a set 2 to 1, but again, it's profit, and that's great. So as you can see, that's a good example there of how we've stayed out of a trade because we're using price action and discretionary, and then we've got into one because we've seen that price action. And again, like I said, as you backtest this more and more, you will start to recognize these patterns, recognize them forming, and make better decisions. So let's look for it. I'd love to find a loser here really for you, because not every, obviously, I just want to, sorry, just to jump off, look at this resistance here. So again, as you backtest it, you'll start to see more things like this. That's a really strong resistance hold in there at that price. And you'll start factoring things like that in. So if it comes back untouched, it maybe you're not as interested in a rejection now, because you know that you've got a strong support line below you. And as we break through that, let's see if we can find a loser here quickly before we go. Come on, doesn't want to. Yeah, as I was saying, every strategy has plenty of losers, but you can really, okay, here we go. Sorry, I've ran through that ever so slightly too quick. But as you can see here, we've come in, we've touched, and we've closed red, so we've closed bearish. Again, as you backtest it, you'll recognize this more. Maybe you're not that interested in this, but let's say we take this, put it in there, your stop would go above. I would aim, I'd maybe be interested just because of the large risk reward, as you can see here. But yeah, there we go, we're taken straight out of it, as you'd already seen. So, you know, it's not always a perfect strategy, clearly. None of them are. But as you start to backtest it, you'll start to see as this comes down, we've just missed out there, we've come up, we've touched it here, we might have got involved and we've been taken straight out. So just go through it, go and have a look at it, really thoroughly backtest it. Honestly, I can promise you this is a very, very strong strategy when used correctly. You'll start to recognize trades that are great and trades that maybe you should be avoiding. And through backtesting and through fine combing it, you will just get a really, especially if you're a beginner, this is absolutely ideal. So go away and do that. If you have any questions about the strategy, please feel free to leave them below, and I'll try and get back to them as soon as possible. But thanks for joining us at Framework FX. Again, if you enjoyed the video, please like it and subscribe. It really does help us. Also, we have a free Telegram group. I'll leave the description there. That's great to be involved in. Feel free to join that. And lastly, again, just visit our webpage, frameworkfx.com, if you're interested in anything that you've seen today. Keep coming back here. We've got some great videos coming up, and happy trading.